Welcome to the Thinking Stack.
Great to be here.
So you've joined us, and we've got this pretty hefty stack, laid out insights, data, history, all focused on one thing today.
That's right. We're diving deep, really deep, into the proposed Trump administration's 2025 tariffs.
Yeah, forget the usual noise, the sound bites. Our mission is different. We're going to dissect this thing layer by layer. We use this framework. Stands for, well, basically asking, what's really true, what's the right move, and what happens next?
Trying to get past the political shouting, to find the actual impact, the sometimes uncomfortable truths.
Because when you strip it all back, the core argument seems pretty clear, doesn't it? Despite all the talk about strength, about protection.
Tariffs like these, they basically end up being a tax on Americans. It's not just, like, our opinion. History keeps showing us this pattern.
Exactly. These things, essentially taxes on stuff coming in, they're meant to protect us, but the track record, well.
Think about Smoot-Hawley back in the day.
Right. Or even the lessons from Trump's first go-around with trade wars. Stuff we should have learned, maybe.
The evidence is there. Jobs lost, prices going up for regular folks, this global backlash where nobody really wins.
And that market volatility that just ties your stomach in knots. So, yeah, buckle up. We're aiming for grounded, maybe a bit brutal, but wise too. Hopefully.
Maybe even witty. We'll try.
We'll see. But definitely authentic, maybe a bit philosophical. Expect some spicy, ruthless clarity.
Okay, let's start where we always should. Cognitive cleanse. Strip away the assumptions, the fears, the wishes.
Layer 1. Cognitive cleanse. The big question. What's actually true? Not what I wish, fear, or assume. Because, let's be honest, tariffs get people worked up. So what are the cold, hard facts?
Okay, the facts. The proposal includes a 10% baseline tariff on all imports. That's huge.
10% across the board. Wow.
But then it escalates, right? Especially with China, where figures up to, 145% have been floated, though that number feels fluid, depending on how retaliation shakes out.
And then there's the 25% on steel, aluminum, cars. Applied to everyone, not just specific countries.
Correct, 25%. So yeah, a massive tax hike on a huge range of goods people and businesses buy.
Now, the way it's often framed is that this is hitting foreign countries, making them pay.
Right, that's a spin, yeah.
But the data, the reality of who pays that bill initially, it's different, isn't it? It's not like China suddenly writes a bigger check to the U.S. Treasury immediately.
Well, what's fascinating, or maybe frustrating, is how well that framing works, even though the evidence points elsewhere. Look back at Trump's first term, 2018 to 2020.
Okay.
Those tariffs added up to about $48 billion in extra costs. And who paid that? U.S. firms.
$48 billion. Wow.
Yeah, that's American businesses importing stuff, materials, components, finished products. They pay the duty at the border. It's a direct hit to their operating costs.
And the quid pro quo, the supposed upside, is always bringing back American jobs, right?
Yeah.
Making foreign goods pricier so companies have to build stuff here again.
That's the promise.
But did it actually happen back then? In 2018, 2020, did we see manufacturing jobs boom?
Connecting the dots with the data, it's pretty sobering. There was no real meaningful long-term jump in manufacturing jobs because of those tariffs.
Really? No big surge?
Nope. Studies from places like the Fed, the National Bureau of Economic Research, they all kind of back this up. The intended benefit just didn't show up in the numbers. Sounds good, maybe, but the economic reality wasn't there.
But it wasn't just a neutral outcome, was it? Some specific sectors definitely felt it negatively.
Oh, absolutely. Prices on things like washing machines shot up maybe 12% or so back then.
I remember that.
And here's the kicker. Industries that use steel actually lost jobs.
Wait, the ones using steel lost jobs. Why?
Because their input costs soared. They had to pay more for the steel because of the tariffs. So it made them less competitive. It's that domino effect,
Right. And the dominoes kept falling internationally too, didn't they? These actions don't happen in a bubble.
This is where the systemic nature of trade really bites you. China, predictably, hit back with tariffs on U.S. goods.
And who got hammered?
American farmers.
Devastated.
Which led to the kind of extraordinary situation where the government had to pay out $28 billion in bailouts.
$28 billion in bailouts.
Yeah.
Because of a trade war meant to help American industry. The irony is thick.
Exactly. Tariffs meant to help certain groups end up needing massive government aid to keep those same groups afloat because of the inevitable retaliation.
It's this cycle. And history keeps screaming warnings at us, doesn't it? We mentioned Smoot-Hawley earlier, but it feels incredibly relevant right now.
It's fascinating how easily we forget, isn't it? Smoot-Hawley, 1930, massive tariffs on like 20,000 goods.
30,000.
Yeah, and it's widely seen as something that made the Great Depression much, much worse. It kicked off global retaliation, trade just collapsed. It wasn't just an American mess, it tanked the world economy.
So looking at these 2025 proposals through that what's actually true lens,
Yeah.
stripping away the rhetoric, it doesn't look like strength, it looks risky.
Very risky. The mic drop clarity here, I think, is unavoidable. Tariffs look tough, right? But they mostly hit your own people first. Your businesses, your consumers.
It's like punching yourself to scare your neighbor.
Exactly. It's a self-inflicted economic wound, hoping the other guy flinches more.
Okay, so cognitive cleanse, done, hopefully. Now let's shift gears, layer 2. Moral intelligence. This is where we ask, what's the right thing to do here? What are the ethics involved?
Right. We move from facts to fairness. The question becomes, what's the right thing here and now for everyone involved? Because these policies hit real people hard. We need to ask who wins, who bleeds, and who gets to decide this is okay.
And immediately, the fairness issue jumps out. These tariffs won't hit everyone the same way, will they?
Not at all. And what's fascinating, or maybe concerning, is how the talk is always about national benefit, but the pain is spread so unevenly.
How so?
Well, think about low-income Americans. They spend a bigger chunk of their budget on basic stuff. Clothes, food, household goods. If tariffs make imports pricier, they feel that squeeze way more.
Yeah, that makes sense.
And small businesses, too. They often run on really thin margins. They might not be able to just absorb these higher costs from tariffs. So they face tough choices.
Yeah.
Raise prices and maybe lose customers or, well, worse.
It almost functions like a regressive tax then, doesn't it? Hitting the poorest the hardest.
In effect, yeah. Even if the aim is supposedly broader, the immediate burden falls on those least equipped to handle it. And we also have to look beyond our borders ethically.
Right, this isn't just about us. There are global partners, allies.
Yeah.
Countries that face retaliation from us. What's the ethical angle on hurting their economies, too?
Well, connecting this to the bigger picture, these tariffs can seriously strain diplomatic ties. They risk kicking off these escalating trade disputes that hurt the global economy. Is it ethically sound to risk destabilizing global trade for benefits that are, frankly, uncertain at home? It seems a very narrow view.
And the justification is often boosting American manufacturing. But is there a real plan for that beyond just the tariffs themselves? Or is it just wishful thinking?
That's a crucial question morally, too. Tariffs are sold as a tool to bring production home, but where's the actual strategy to support that? Just making foreign stuff expensive doesn't magically create a thriving domestic industry. We saw this play out, didn't we, with Foxconn in Wisconsin.
Oh yeah, Foxconn, billions promised, thousands of jobs. Mostly smoke and mirrors in the end, wasn't it?
The gap between the promise and the reality there was just huge. What's fascinating is how it was sold as this symbol of reshoring, but it delivered a tiny fraction of what was promised, mostly PR. Was it ethical to raise hopes like that without a real plan?
It's a powerful reminder. Tariffs alone don't cut it. You need infrastructure, training, R&D, a whole ecosystem. And we've seen tariffs backfire before, even when maybe the intention was good.
Definitely. Think about the Bush steel tariffs in 2002.
Right.
Okay, they gave steel companies a temporary boost, but estimates suggest they cost something like 200,000 jobs in industries that use steel.
More jobs lost than saved.
Way more. And then the WTO ruled the tariffs illegal anyway, so they had to be scrapped. Was that the right thing for the overall economy? Hard to argue it was.
So considering the ethics, the who wins, who bleeds question, it gets really uncomfortable. The pain seems concentrated, the benefits uncertain, and maybe narrowly focused.
Yeah. The mic drop line here feels pretty sharp. This isn't really about justice for all. It looks more like economic cosplay.
Cosplay. Explain that.
It's like dressing up in the costume of economic toughness, right? Hurting a lot of people, consumers, small businesses, farmers, even global partners, just to signal virtue, this kind of nationalistic strength to a select few. The ethical math just doesn't seem to add up when the costs are so widespread and the benefits so shaky.
Economic cosplay. That's a strong image. Okay, let's move to the next layer then. Systemic foresight. This is where we try to predict the ripples. What are the second, third order consequences?
Exactly. We shift focus to the future now. Try to understand the complexity, anticipate the knock-on effects. The question is, what happens next and to whom? Because these big economic moves, especially global ones, they create waves, big ones, often unintended ones.
And based on what happened last time, around 2019, we can probably expect swift retaliation, right? Other countries aren't just going to take this.
If we look at the bigger picture of trade dynamics, yeah, escalating global retaliation feels almost baked in. We saw the playbook before.
Like what could happen?
Well, China, for instance, they dominate rare earths, right? Stuff critical for EVs, electronics. They could easily restrict exports. Imagine the chaos that causes here.
Yeah.
Mexico's already hinting at counter tariffs on U.S. farm goods. Again, hurting our farmers, the EU. They might just pull back on cooperation on things like clean tech deals, setting back climate goals.
So it becomes this tit-for-tat mess, a trade war where everyone loses and the original point gets lost in the conflict.
Pretty much. And beyond just direct retaliation, what about the broader disruption? To supply chains, to the economy overall.
Right. Those global supply chains.
Yeah.
Businesses spent decades building them.
And what's fascinating, in a bad way, is how tariffs just throw a giant wrench into those carefully tuned systems. Suddenly, costs jump as companies scramble for alternatives if they exist. Production gets expensive.
Which means inflation comes back. Or gets worse.
Exactly. Those higher costs inevitably get passed on to consumers. We're already worried about inflation. This could be like pouring fuel on the fire, making everyday stuff even pricier.
And what does the Fed do then? If tariffs are pushing prices up?
That's the really tricky part, isn't it? If inflation surges because of tariffs, the Fed might feel forced to keep interest rates high or raise them again to cool things down.
But what if the tariffs are also slowing the economy down because of the disruption and higher costs?
Then you risk stagflation. High inflation and weak growth. That's a nightmare scenario for policymakers because the tools to fight one problem make the other worse.
And the markets, they seem nervous already, don't they? Just the talk of this stuff is causing jitters.
For sure. Stocks have been volatile. Investors are clearly uneasy about this prospect. It signals a lack of confidence, a real worry about the economic fallout. That early reaction tells you something.
It reminds me a bit of Brexit, actually. The promise was sovereignty control.
But the reality was major economic disruption.
Yeah. Empty shelves, broken supply chains, prices soaring. The complexity of unraveling trade ties was just underestimated.
It's a really good analogy. Brexit showed the hidden costs, the unforeseen consequences of disrupting established economic relationships.
So looking ahead, the idea that these tariffs just magically fix everything, it seems pretty unlikely given history and the likely global reaction.
Seems very unlikely. The mic drop here is stark, I think. Every single tariff starts a chain reaction. It's not isolated.
Right.
And with these proposals, America's economy kind of looks like the first domino in a line that could stretch around the globe and cause a lot of damage.
A house of dominoes. Sobering. Okay, let's dig into why these policies get traction sometimes. Layer 4. Embodied insight, we ask. What am I wired for? And how does that distort my judgment? What are the psychological pulls?
This layer gets into the human stuff, right? Economics isn't just logic and spreadsheets. Our gut feelings, our fears, our sense of identity, they play a huge role in what policies feel right, even if the data says otherwise.
And the tariff rhetoric often seems aimed straight at those gut feelings, doesn't it? Protect ourselves, fight back against unfairness. It's emotional.
Totally. If you connect it to basic human psychology, when people feel economically insecure, worried about jobs, it fuels nationalism. It creates this powerful desire for control.
And tariffs feel like taking control.
Exactly. Even if they might hurt us economically overall, they offer this maybe superficial but psychologically potent feeling of doing something, taking decisive action, asserting national power in a confusing world. That illusion of control can be very comforting, even if it's not solving the root problem.
So feelings can just override the facts. The emotional appeal is stronger than the economic analysis sometimes.
Well, what's fascinating is how easily that happens. Our wiring makes us prioritize feelings, gut reactions, the urge to protect us, the strong sense of national identity. These can be so powerful that contradictory data just gets brushed aside, or we actively ignore it because it doesn't fit the emotional narrative we prefer.
History has examples of this too, right? Well-meant protectionism backfiring.
Oh, definitely. Reagan's tariffs on Japanese semiconductors in the 80s.
Yeah.
The intention was clear, protect the growing U.S. chip industry. But it led to retaliation from Japan, and you could argue it actually hurt American tech leadership long-term by fostering protectionism instead of forcing innovation. Good intentions, maybe, but not the best outcome.
So the feeling that tariffs equal strengths might be appealing deep down, but it doesn't mean it's actually true economically.
Not at all. The mic drop for this layer, I think, is crucial. We don't need a stronger, more emotional response to these complex economic challenges.
Who do we need?
We need a better nervous system, a collective one, maybe. One that can actually process the data, think about long-term consequences, and make choices based on evidence, not just react emotionally or go for the simple nationalistic fix.
A better nervous system. I like that. Okay, layer 5, human-centered design. Let's ground this in how real people, workers, voters, consumers actually behave. Not how theories say they should behave.
Yeah.
The question, how do real people actually behave?
Right. We move from the abstract theories, the psychology, to the messy reality on the ground. How do families making ends meet, business owners trying to survive, voters hearing sound bites? How do they really react when tariffs hit? It's about that unpredictable human factor. Policies don't always get the response the designers expect.
And one key thing seems to be that voters often aren't diving into the details of trade law, are they? They're responding to simpler messages.
If you look at political communication, yeah, it's super clear. Complex economics gets boiled down to slogans: bring jobs home, fight China. Voters latch on to those simple emotional ideas. They might not know the tariff schedule or the WTO rules, but they feel the sentiment.
And politicians know this,
Oh,
obviously.
absolutely. They know how to use those simple narratives to build support, even if the underlying policy is, shall we say, questionable economically.
Meanwhile, the businesses and consumers actually dealing with the tariffs. You're not just sitting there. They adapt, right? They find workarounds.
What's fascinating here is just how adaptable people and businesses are. Facing higher costs from tariffs, businesses get creative. They look for suppliers in countries not hit by the tariffs. They might squeeze their own profits for a bit.
Or they just pass the cost on.
Or, yeah, more likely, eventually they pass it on to consumers via higher prices. And then consumers adapt, too. They might buy less, switch to cheaper alternatives, which could still be imported just from somewhere else, or just cut back. These shifts can totally undermine what the tariffs were supposed to do.
We saw this with Apple and Foxconn again, didn't we? All the talk about reshoring.
Exactly. Between, say, 2017 and 2023, huge fanfare about Apple bringing manufacturing back via Foxconn. Loads of PR, political points scored.
But the actual job.
Relatively few materialize, certainly compared to the hype. Why? Because those massive, complex global supply chains, especially in Asia, you can't just pack them up and move them to the US overnight. It's incredibly difficult, incredibly expensive.
So the tariffs didn't force Apple to ditch China?
Not fundamentally. They just made their existing system more expensive, a cost that, probably got passed on to people buying iPhones, at least partly. The behavior didn't change as intended.
So the ideology behind the tariff design clashed with the reality of human and corporate behavior.
Precisely. The mic drop here really hammers this home. We design tariffs based on ideology, on how we wish people would act. But humans, businesses, markets, they operate on incentives, costs, avoiding pain. Higher prices, broken supply chains, that's the real pain that drives behavior, often in ways the policy architects never planned for.
Pain, not principle. Okay, critical stage now, layer 6, risk and resilience. The blunt question. What breaks if the bet goes wrong? What are the real dangers here?
This is where we have to stare the potential downsides right in the face, stress test the system, ask what if. What could go wrong? How bad could it be? And can we actually handle it if this tariff strategy blows up?
And it sounds like the risks aren't minor. They could be pretty major, cascading even.
If you connect this back to global dependencies, yeah, the risks are significant. Think about retaliation again. What if China does ban lithium or rare earth exports?
So critical mineral.
Absolutely critical for EVs, tech. That could cripple those industries here, or the risk of inflation just staying high, forcing the Fed into that stagflation corner we talked about.
And can we even make the stuff here quickly if imports get too expensive? Do we have the factories, the workers ready to go?
That's a massive question about our actual industrial capacity, isn't it? Building factories, supply chains, training people, that takes time.
And money. And a plan. Just slapping tariffs on doesn't magically create that overnight. So there could be this long, painful gap where imports are expensive, but we can't make enough ourselves yet.
Exactly. Leading to shortages, more inflation, economic drag. And again, we have to look at history. Smoot-Hawley wasn't just a blip.
No, it was catastrophic.
What's really sobering, frankly terrifying about Smoot-Hawley is the scale. World trade dropped by 2/3, 66
Yeah, incredible.
And that economic nationalism, those trade walls, they're widely seen now as turning a recession into the decade-long Great Depression. It's the ultimate cautionary tale about trade wars.
So the potential downsides here aren't just like a bad quarter for the stock market. They could be systemic, long-lasting.
Deeply damaging. The mic drop for this risk layer is pretty stark. Every tariff is a gamble,
Yeah.
a big one.
And this one.
With these 2025 proposals, we're potentially betting the House the whole U.S. economy on a strategy with a terrible historical track record, without any real insurance policy if it fails. The cost of being wrong, well, it could be paid in national decline.
Wow, okay. That is a lot to consider. Let's move to the final layer, layer 7, execution engine. This is about solutions, alternatives. If the goal is to protect local industry, what's the real path forward? The question, how do we act and adapt for real?
Right, this is where we shift from critique to construction. What actually works? What are practical, evidence-based ways to support domestic industry, build resilience, without resorting to blunt instruments like broad tariffs? How do we get tangible, sustainable benefits?
Again, it seems pretty obvious from our discussion that there are other tools that are more targeted, less likely to spark global trade wars.
If you look at long-term economic development, yes. Things like targeted investments.
In what?
Infrastructure. Modernizing roads, ports, the grid, education and workforce training, making sure people have the skills for future industries, pouring money into R&D, fostering innovation in key tech sectors. That stuff builds real, lasting domestic competitiveness, much more than tariffs do. It strengthens the foundation.
And instead of unilateral actions, maybe working with other countries.
Absolutely. Strategic trade negotiations. Talking with partners, addressing specific legitimate trade issues collaboratively, that usually leads to more balanced, sustainable outcomes than just throwing up tariff walls. Building alliances is smarter than starting fights.
We've seen others try more nuanced approaches, right? Like the EU with their carbon border tax.
What's instructive there, is the EU's carbon border adjustment mechanism. It's a more sophisticated use of trade policy. It's not just a random tariff. It puts a carbon price on imports based on how polluting their production was. So it levels the playing field for cleaner EU industries and pushes global producers to decarbonize. It aligns trade policy with the bigger goal, sustainability.
So it's strategic, targeted, and linked to a wider objective, not just retaliation.
Exactly. It shows you can use trade policy intelligently, not just as a club.
Yeah.
Which brings us to the final mic drop for this layer, focused on leadership. If you're facing complex global economic problems, systemic issues, and your main tool, maybe your only tool, is a hammer, like broad tariffs, when what you really need is a scalpel or maybe a whole toolkit,
Yeah, right.
then you're not really leading. You're not solving the problem effectively. You might actually be a liability to the very economy you claim you want to protect.
A liability. Strong words. Okay, let's try to wrap this all up. After peeling back all those layers with the ITS framework, what's the final takeaway on these proposed 2025 tariffs?
I think the core argument that just keeps coming through is that these tariffs, they aren't a smart strategy for building a strong, resilient U.S. economy. Instead, they look like a depressing repeat of past mistakes, driven more by fear, by simple nationalist slogans than by sound economics, historical lessons, or a clear view of the likely global reaction.
The echoes of Smoot-Hawley, the actual negative results from the last round of tariffs, higher prices, damaged alliances, the risk of wider conflict, it all points in a pretty worrying direction.
It really does. We've seen this movie before, haven't we? And the ending is usually the same. Protectionism sounds good to some, but it ends up hurting almost everyone. It risks undermining the very prosperity it claims to be protecting.
So one final integrated thought, pulling it all together.
You don't build a resilient economy by taxing your own future.
Taxing the future.
To try and relive some kind of economic fantasy from the past, a fantasy of self-sufficiency that just isn't possible or even desirable in today's interconnected world.
This was The Thinking Stack. Clarity over comfort.
Truth over tantrum.
Catch you next time.